let's take the same exact view and look at it from the perspective of a startup's founder. Again, from idea through exit, full life cycle. So same thing, research the domain and the problem space, right? It's really no different. You need to understand if there's a problem to solve, what the size of that problem is, what the product market fit is. You research the competition, which is very different because you might be running into things more closely related to intangible intellectual property relating to startups that might not necessarily be as much of an issue outside of branding with real estate. One thing that startups will typically do, and I like to see in a startup that I'm considering investing in, is developing a proof of concept. And this is really hard with real estate because of the nature of the asset class as well as the scale. But in a lot of cases with startups, there's the opportunity to build an ugly, loose proof of concept, get it in front of people, test it out, see if there's value, see if there's traction, and basically not only prove the potential value, but also understand exactly how it's being received and how feedback can affect what the final version of the product ends up being. Same thing, you develop a business plan. Typically, it's not a PM. In a case like this, you're going to have that ready to go, but usually a lot of the primary pitch is in a separate pitch deck, which is usually much more concise. And then you have supporting materials. Raise capital, build, grow, reassess, repeat. Now, one thing that you do see with real estate syndications, but is considerably more common and expected with startups, especially pure technology startups that have the ability to scale to global populations, is that loop goes back a little bit. So you would continue to raise capital. You usually hear about series capital. So we could talk very briefly about that. Generally, when a company is just starting, they will raise what's called a pre-seed round, meaning that it's typically friends and family. If you're lucky enough to have a network that has capital there, it is typically composed of angel investors, individuals who perhaps have had a tech exit in the past, understand what that life cycle and risk looks like, understand what it takes to assess the capability of a founding team and whatnot.